Welcome everyone to another promising session on the Extra and Speed Live this morning. I am grateful and thankful to be here with you this morning as we take a fresh new look at the financial market. So before we kickstart the session, I would like to confirm that we are good to go this morning. So if you can see my screen and you can hear my voice clearly, I will appreciate that you type in hi in the comment section, as this will help me know that we're actually on the same page, that the sound quality is good, the visuals are all right, and then we can kickstart the session. So I anticipate your response. So I would like to see some feedback, please, in the comment section, and then let's get this started. Let's see what we have here. Okay, I can see 612, good morning. Madalena, good morning to you. Noble Gaming, okay, good morning. Dino, good morning. Hey, Carrie, good morning to you. Glad to have you around. Thank you very much for your confirmations. I really do appreciate that. So with that being said, my name is Sheriff Daramola. And for the next 1 hour, I'm going to be your host as we embark on a price action based technical analysis journey as we take a look at the financial market, reviewing the current market structure using technical parameters, chart patterns, trend lines, and key levels to manage our existing position, and at the same time, let us be prepared for the New York session today. And for those who are joining us for the first time, you are highly welcome. And what we simply do here is to come together as a community, gathering in anticipation of both the New York and London trading sessions. During this time, we will be reviewing and managing our current positions, while we also aim to position ourselves strategically for today's trading session. So we do this on a daily basis, 10 a.m. UTC, 11 a.m. West African time. And it might look a little bit overwhelming at first, but trust me, with time you get to understand how this works, as the more time you spend with us and the more time you stay tuned in, you get to understand how it works, and you will be able to use the information you have gathered here to independently make your decisions on your account. So on that note, I once again welcome you all, and let's dive right into the business for today. As usual, you know what we do first. The first thing we always want to do is to keep tabs with the fundamentals by checking the economic calendar. And you know how important the economic calendar is for us here, as these fundamental factors often manifest on the chart in technical patterns and price movement. And by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns. And for today, Tuesday, June 28th, we only have one high impact event coming from the Japanese economic feature, and this is the monetary policy meeting minutes, which everyone will be looking forward to, as it will give us an insight into the monetary policy of that economy. And since we have the USDJPY on our watch list, we're also going to be looking at how the market participants in that market will be anticipating this event using price action to understand the underlying psychology of price movement. And I also want us to take note of what is going to be happening tomorrow. We have very high impact event coming in from the UK and the US economy, and that is the consumer price index from the UK. That is tomorrow. And we also have the first chairman who is going to be doing his testification before the House of Congress. That one will happen tomorrow too as well. And these are impact events that is very likely that we start seeing anticipation of this event reflect on the chart today. So we are going to be taking all this into consideration while we review the current market structure, and at the same time prepare ourselves for the New York session. So with that being said here, let's dive right into the business. And as usual, the first instrument we are going to be taking on today is the US oil. And on the US oil, we have an interesting situation going on right now as price action is currently in profit on this commodity. Now, let's quickly talk about how the week started for us on this instrument. What did we see in this market that made us to buy the US oil spot, and what do we think that our next line of action will be on this commodity? So at the beginning of the week, we acknowledged the fact that price action was still right below our key level, which we identified on the higher time frame, that is the 4 hours time frame. We saw the $72 level, where price action since last week has been trading below this area to emphasize the strength of the sellers at that point. However, we saw another key structure here after looking at what happened throughout the course of last week's trading session. As you will see here, since last week, we have been noticing how price action had consistently found higher highs and higher lows in this market. And when we connected the series of higher lows here, we had a couple of trend lines to work with for this week. And you know how we use our trend lines in this community. As long as price action remains above the trend line, we want to be looking out for opportunities to buy the US oil spot. And as a result of this, we were looking out for buying opportunities at the beginning of the week. Then another thing we saw yesterday was this flat channel we identified. So at the beginning of the week, we saw our price action was ranging between the $71.45 level and the $70.85 level to give us an insight into the indecision in the market at that point. And you know how we do it whenever we have this kind of simple flat channel. We want to wait for price action to break out of the resistance line to give us an opportunity to buy, or break down of the support line to give us an opportunity to sell. Though prior to the beginning of the live session yesterday, we acknowledged the breakout of the resistance line, which moved price to about 78 pips in our favor before price action dropped to the downside. So I told us all here yesterday that we are going to be anticipating more buy opportunity, as we might likely see price action come back to retest the structure to incite another wave of bullish momentum. And if you had positioned yourself just right above the $71.45 level, you will currently be be in profit at this point in time. So well done to you for being on standby to catch that move, as you will currently be running with about 47 pips in profit. Now, for those who are taking advantage of this opportunity, well done to you for being on standby. And the next thing we want to be doing right now is to secure the current buy position by moving our stop losses to our entry point. And the reason why we are going to be moving our stop losses to the entry point is simply because of the continued selling pressure we have been noticing around that $72 level. So it is very, very important that we secure this position, as anything could happen, as the continuous persistence of sellers around this zone at the $72 level could still send price crashing to the downside. So it is important that we take that precautionary measure, move our stop losses, secure the current position, as if price drops, the worst case scenario we will have here will be at break even. So while the positions are well secured at this point, how do we intend to maximize the potential of a bullish momentum, if a bullish momentum is what we are going to be seeing in this market? Or are we going to be getting ready to sell if the continued selling pressure around the $72 level happens? Now, before we go into the details of what to look out for from this current market structure, I would like us to scale up a little bit into a higher time frame, where we want to see things from an holistic perspective, and then align the structures we have on the higher time frame with what we have on the lower time frame to decide what our next line of action will be for today. And to do this, I want to scale up into the 4 hours time frame. So here on the 4 hours time frame, this was what we spotted at the beginning of this week. Well, the first thing we saw here, after taking into consideration the activities of price action since the last week, of the month of May was this presence of lower highs in this market, which we connected duly to give us a trend line to emphasize the character of sellers in this particular market. But something interesting happened here since the first day of the month of May. As you can see, despite the lower highs we saw in this market, the appearance of buy pressure around the $67 level since the beginning of the month of May, negating all attempt by the sellers to break through the structure, is a clear sign that this area here is a very strong buying niche in this market. And with a continuous buy pressure from this area, bringing price back into a very important confluence we identified at the beginning of the week around the $72 level, is something that was our center of focus for the first half of the week. And one thing about this structure here is the fact that that $72 level, which happens to be our key level for the week. And what do we mean by key level? Key level is a level which we always use to guide our trading activity. So if price action breaks out of the key level to the upside, we want to be looking out for structures and patterns that will support a bullish move. However, if price action continues to find selling pressure below the key level, we want to be looking out for patterns and structures that will be supporting a bearish momentum. And if you look at what has been happening around that $72 level since last week Friday, you will see that we have continued to see selling pressure around that area, negating all attempt by the buyers to break through that structure. And one other key factor about that zone is the fact that it also shares a confluence with the bearish trend line we identified earlier. Now, the question at this juncture in the market is that we are going to be looking forward to see how participants in the market will be reacting to both the $72 level and the trend line for this week to determine what our next line of action will be. Now, one of the perspectives we are going to be looking at is that if price action at any point this week breaks out of both the $72 level and the trend line, then at this point it will be a clear sign that the trend line may no longer be able to negate the bullish attempt in this market, hereby giving us a bullish signal to anticipate a trend continuation to the upside. However, if price action continues to find selling pressure below the 72 and the bearish trend line here, then it will make quite a whole lot of sense to look out for selling opportunity for another wave of sell-off in this market. Now, our center of focus for this week is simply around that area at the $72 area. So in order for us to be able to understand what is really going on around here, we would need to scale down into a much more lower time frame, like the 1 hour time frame, to see how participants in this market has been reacting to this particular level. Now, scaling back down into our 1 hour time frame after digesting the technical information we have gathered on the 4 hours time frame, now this is what we can see here. And for the fact that price action still remains above the bullish trend lines, the couple of bullish trend lines we identified at the beginning of the week, the potential of a bullish momentum can still not be ignored at this point. So since we already have a buy position, remember we took advantage of this move at the breakout of the $71.45 level. And since then, price action has climbed to the upside. We want to maximize the potential of this move by adding more position if price action breaks out, retests the $72 level to maximize this move all the way to the upside. So we continue to remain bullish on this commodity as long as price action remains above these two structures. The first one is the $71.45 level, and then the second one is this trend line here. So as long as price remain above these two structures, we shall feel comfortable in our buy position, while we also look out for more opportunities to maximize the potential of this bullish move. So let's see how price action plays out as we also wait out for more opportunities above this $72 level. However, in as much as we're looking out for buy positions here, we cannot ignore the potentials of sellers. And you know how we do it in this community. We always want to ensure that we are also as dynamic as the market so that we can be on standby to catch any potential move. So with the situation that we are looking at for buy position from the structure, we are not going to be ignoring the potentials of sellers. And what do we want to see on this chart that will make us change our bias from bullish to bearish? Well, we already discussed this earlier, and if you look at what we have been seeing around the $72 level since last week Friday, you will see continued selling pressure around this area, hereby negating the attempts by the buyers to break through that structure. And coupled with that is this bearish gap we saw at the beginning of the week, which emphasized that the major key players in the market, we traded this market during the course of the weekend, were tending towards a bearish momentum, hereby giving us that bearish gap. And because of the situation, we cannot ignore the seller's potential. So for me to sell the US All Spot today, I would rather want to see price action take out the bullish trend line, that is, break down the bullish trend line that we have here. Then at this point, we want to start considering selling the US All Spot. And one thing for sure here is that if this trend line is broken to the downside, this will be the first time price action will be breaking down the trend line, and at the same time it will be giving us a clue into the inability of the trend line to continue to have the capacity to continue to negate the selling pressure. And if this happens, we want to scale down into our lower time frame, where we want to be looking out for patterns and structures that will be supporting a bearish momentum. And this would reflect on the chart as price retesting either the $71.45 level or the trend line here, where we shall be looking out for patterns and structures like reversal patterns to support a bearish move to the downside. And if this happens, we want to join a sell move and have a sell stop order below the structures at the $70.85 level and the $70.50 level to maximize the potential of this bearish move. So going into the new week, into the New York session today, we have two structures we are using for selling opportunities here. The first one here is the $71.45 level, where a breakdown of that structure would have also broken down the bullish trend line here to give us an opportunity to sell the US All Spot. So these are my views here on the US All Spot for today. If you have any questions or you need me to make any clarifications in any aspect I have discussed in the last 20 minutes, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to read through the charts and give some time for you to screenshot my screen or mark out the key levels that we are going to be using as reference points to make our independent decisions for today. So let's see if there are any questions. If you have questions, let me know in the comment section. And if there are none, I will just move on to the next pair. All right, so in the absence of no questions, I want to assume that we are on the same page here. So I will be moving on to the next instrument. So as usual, the next instrument we are going to be treating is going to be the USTech100. And in fact, on the USTech100, we have a very profitable position running at this particular point in time. Remember, at the beginning of the week, we had this flat channel identified, giving us a little insight into the level of indecision in this market, as price action at the beginning of the week was ranging between the 15,135 level and the 15,075 level. And with this simple flat channel we have here, you know how we use our flat channels in this community. We remain patiently waiting for structures to mature, where either a breakout of the resistance line will give us an opportunity to buy, or the breakdown of the support line will give us an opportunity to sell. And prior to our live session yesterday, I told us all that we are going to be having a sell stop order below the 15,075 level, as well as a buy stop order above the 15,135 to catch this move when it happens. But as you can see here, price never got to that 15,135, but instead we saw the breakdown and a couple of retests of the 15,075, which happened to be our initial support line at the beginning of the week to trigger our first sell position for the week. And since then, price action had moved significantly well in our favor. In fact, it moved over 90 pips before we saw this bullish traction that is growing on at this point. So for those who are taking advantage of this opportunity, well done to you for being on standby to have caught this move. Now, the next thing you want to be doing, obviously, at this point is to move all stop losses to secure this current sell position. Of course, we don't want to lose out on whatever we have made so far. So the most appropriate area I think that we could move our stop losses is around between the 15,060 and the 15,030 zone. Let's give room for price action to breathe with the hopes that price action still has a potential of continuing the trend to the downside. So well done, guys, for taking advantage of that move. Move all stop losses to secure current positions, and let's see what we are going to be looking out for today's New York session. And for those who had missed out on this opportunity, it's okay, there's no cause to worry. Let's wait out for new structures to mature before we want to be joining any bearish move at this point. Now, considering the fact that price action has been bearish since the beginning of the week, let's connect the series of lower highs, as this will give us a yardstick that will help us guide our trading activities for today. Now, if we bring out our line chart and start connecting the series of lower highs since the beginning of the week, we should be having something like this. So we have a trend line to work with for today, and what this simply means is that as long as price action remains below this trend line, we shall feel comfortable in our sell positions, while we also look out for more opportunities to maximize this bearish move. So we have a trend line right now, so let's ensure that this trend line continues to guide our moves. Price remain below the trend line will give us more opportunities to sell. So at this point in time, there are two ways we can join a bearish move at this point. The first situation that could happen here following this impulsive move into the $15,000 area, a very strong psychological level considering the round figure of that price. And if we go to as far back as last week's trading session, we saw how that level was also a major determinant of price action in this market before it was broken to the upside on Thursday. And now price action is back into that level with some buy pressure resuming around that area. So we need to be very, very careful at this juncture, as we could still see a bullish momentum begin from this level. So what we are going to be doing now is to remain patient and wait out for key structures to mature. And one of the patterns we are going to be looking out for from this current market structure is price action following this impulsive move, probably coming back into the trend line at some point, and the appearance of selling pressure around this area where buyers found it difficult to break through and break out and retest the trend line will give us an opportunity to sell. Then we could sell and then also have a sell stop order below the $15,000 mark to maximize the potential of this bearish move. Now, in as much as we have this marked out here, we want to also have a level that we are going to be using to guide any trading activity if it so happens that price action comes back to retest that bearish trend line. Now, to identify that, we will bring out our line chart and then find some support level where support and resistance merged to give us something to work with. So we have something situated at the $15,050 level. So you want to mark this level out on your chart, as you will be using this as a reference point to guide our trading activity for today. So I'll give this, let me give this a red color, a wine color, a red color. Let's give it a red color. So we have this one marked out on our chart. So what we are going to be doing is this. You can how it shares a confluence with our trend line. So we want to see how price will react to that level. If price action climbs above, then if price climbs up to this area, we want to see some retest reactions, selling pressure to join, then had a sell stop order below the 15,000 level to join the continuation to the downside. Now, if price action does not climb up into the zone, but instead evolves into a trend continuation pattern, so there is a likelihood that we see a consolidation phase just around the $15,000 mark, where we will look out for a breakdown of the support line of that range to give us an opportunity to sell. So these are the two ways we are going to be looking out for today to guide any bearish momentum in this market. So on this note, we are still holding on to a bearish momentum, and let's see how this is going to play out. Now, in as much as we're selling, we are looking out for selling opportunities here, and we have also moved our stop losses on the current sell position. We cannot ignore the potentials of buyers in this market. And you know how we do it in this community. We want to ensure that we are also as dynamic as the market so that we can be on standby to catch any potential move when it happens. So if we are going to be considering the idea of buying the USTech 100 today, what are we going to be seeing on this chart that will make us change our bias from bearish to bullish? Now, I shared earlier here how the $15,000 mark has been a major determinant of price action, and in fact recently was a demand zone last week. And now for the fact that price action is back into that zone with a couple of bullish candles in the last couple of hours, I'm of the opinion that the tendency of buyers coming in cannot be ignored. Now, if we are going to be buying the USTech 100 from this current structure, I would rather see price action take out the trend line, which has been holding this bearish momentum since the beginning of the week. So I want to see price action break out of that trend line. Then at this point, it will be a clear sign that the trend line may no longer have the capacity to continue to negate the bullish momentum. And if this happens, we want to start getting ready to buy. So once the breakout happens, we scale down to a lower time frame where we want to see signs that buyers are gradually gaining momentum, which would reflect on the chart as a retest of either the trend line or the $15,050 area, where continued buy pressure reversal patterns there will give us an opportunity to join a bullish move to the upside. And in fact, if this happens, we have a couple of levels here that we can use to maximize the potential of this bullish move. So we have one at the 15,075, and we also have another one at the 15,135, which happens to be the highest point price action has ever been for this week. So this is how we are going to be looking out for buying opportunity on the USTech 100. Now, from what we have said so far, you would agree that this trend line is going to be serving as a major yardstick to guide our trading activity for today. We are continued selling pressure below this trend line will be welcoming selling opportunities, while the breakout, a breach of the trend line to the upside, will be welcoming opportunities to buy. So let's mark these levels out on our chart. Screenshot my screen if you want to, and let's use it as a reference point to guide our trading activity for today. Now, if you have any questions regarding what I just explained, or you need me to do a clarification to whatever I talked about here, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to go through the chat and see if there are questions, and at the same time you can use that opportunity to mark out these levels or screenshot my screen if you want to for reference purposes. I can see Amelero 716. Good morning to you. Glad to have you around. Trust you are doing well. Okay. All right, so in the absence of no questions, I want to assume that we're on the same page. So on that note, I will be moving on to the next instrument. So the next instrument we are going to be looking at for today is going to be the GBPUSD. And in fact, on the GBPUSD, we have been selling this instrument since the beginning of this week. And let's run through what we saw at the beginning of the week that incited the idea of selling the GBPUSD. So first of all, we acknowledge the fact that price action has been trading below the 1.28500 level, which happens to be our key level for the week. And for the fact that price remains below that structure, we have no other choice than to look out for selling opportunities in this market. Then we saw here during the first 10 hours or 12 hours of the week, we saw how price action was initially ranging between the 1.28375 and the 1.28100 level to give us a simple flat channel to work with for the week. And you know how we do it whenever we have this kind of simple flat channel. We want to remain patient, waiting for structures to mature in the form of either a breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And in fact, you saw what happened here yesterday during before our live session yesterday. We already had the breakdown of the support line happened here, and I told us all that we are going to be looking forward to a retest of structure to join, and I told us that selling below the 1.281 makes a whole lot of sense, while we also look out for more opportunities to maximize this move by having a sell stop order below the 1.28020 level. And since then, we saw how price action for the first position moved about 40 pips and the second position moved about 30 pips, giving us a total of 70 pips on that first one. And price action moved back. We saw buy pressure resume, and I do hope you moved your stop losses accordingly to secure your position, as if you had done that, you would have been taken out with a modest of profit, or at a worst case scenario, break even. And in addition to this current structure here, well, first of all, let me congratulate those who were part of that trade, though we didn't really have any significant profit on that one. But as we head into the New York session today, how do we intend to join any potential trading opportunity around this area? Well, first of all, let's go into the higher time frame. Let's look at things from an holistic point of view before we come back down into the 1 hour time frame to make an informed decision. Now, on the 4 hours time frame, this was what we were able to see here at the beginning of the week. Now, we saw this on Monday when we were trying to analyze to decipher what our next line of action will be. So we took into consideration the activities of price action since the last trading day of last month till this present moment. And it is quite obvious that price action has been very bullish. And when we connected a series of higher highs and higher lows, we had a couple of ascending channels on this chart. So we had the first one here before we saw the deviation of that support line, as you can see, giving us a new ascending channel using that level as a support line, whereby leading to the breakout of the resistance line of that first ascending channel. So the second ascending channel came in after connecting the series of these higher highs and these higher lows, as you can see here, hereby emphasizing the strength of the buyers in this market. Now, something interesting happened as soon as price action got to this peak at the 1.28500 level. Let me highlight that so that you can see things. So around this area, as soon as price got here, last week's trading session, we began to see selling pressure resume from that area. Now, if we take into consideration the impulsive move that led to that point, you will agree with me that a retracement from this current market structure seems long overdue. And with the continued selling pressure around this area where price action appears to be trapped within a range, there is a high chance that we could have a retracement anytime soon, leading price into either the trend line or this trend line, probably in an anticipation of another wave of bullish momentum, or even break down the structure to incite further sell-off in this market. So with this information in mind, we want to zoom into the current market structure, which is between the 1.28500 level, as you can see here, and the 1.2770, where price action has been caught within since Thursday of last week's trading session. And with this situation here, the market structure is looking more like it's going to be inciting a bearish move if price action goes on to break down this 1.2770. Now, if you look at since Thursday, this level has been a major demand zone. As you can see, sellers have found it difficult to break through the structure. So if a breakdown retest of this level happens during the New York session today on our lower time frame, we are going to be looking out for selling opportunities. And in addition to that, it appears price action is transitioning into a reversal pattern. Now, if we take into consideration the impulsive move that got us to this point, so let me give you a visual representation of what I'm talking about here. So we had the impulsive move that got price into the 1.285. We saw price drop back into the 1.27, and during the last 24 hours, you can see how it was difficult for buyers to climb back above this area to give us a lower high. And when we begin to see lower highs in the market, it's a clear sign that sellers are gradually gaining momentum. And in fact, this structure we have here is turning into a reversal pattern in the form of a double top structure. And you know how we do it here. Immediately we start identifying the transition of price action into a reversal pattern. The next thing we want to be doing is to identify a neckline which we are going to be using to guide our trading activity. So a breakdown of the trend line will validate this reversal pattern and at the same time reveal the potency of this reversal pattern. So coincidentally, the neckline of this reversal pattern falls just along the 1.2770, where a breakdown retest of this level on our lower time frame will be giving us the privilege to join a bearish move. So what we are going to be doing now is to scale back down into the 1 hour time frame, as with the information here you already have a background knowledge of where we are coming from. So going back into the 1 hour time frame, this is what I was able to spot here this morning. And in fact, I had a sell stop order below the 1.2770 level to join that bearish move to the downside. And one of the key parameters that was part of our yardstick to join any bearish move here is this trend line since Friday of last week. Now, when you connect the series of this trend line, we have a bearish trend line, series of lower highs, we have a bearish trend line. And as long as price action remains below this trend line, we have no other choice than to look out for selling opportunities. And if this leads to the breakdown retest of the 1.2770, this will be a good confirmation to be part of a bearish move to the downside. So we could have our stop loss somewhere around above the trend line, which will be dovetailing into between 25 to 30 pips to secure and protect our portfolio against any surge that could take price out of that zone. So this is how we are going to be managing our position for today. So we are looking out for selling opportunities as long as price action remains below the trend line and the 1.2770. Now, in as much as we're looking out for selling opportunities, you know how we do it in this community. We also want to keep tabs with the potentials the buyers also have at this particular juncture. Now, for us to buy here, I would rather see price action take out the trend line to the upside before I can start considering buying the GBPUSD today. And though we have been seeing some buy pressure around the 1.277, where this breakdown we have here could later turn out to be a false breakdown, so we want to be very mindful and ensure that we move our stop losses accordingly as soon as price action moves significantly well in our favor. So if it so happens at any point that we have a breakout of this trend line, then at this point we want to start considering buying, as a trend line here appears to the breakout of the trend line would have given us a sign that it could no longer hold the bullish momentum, and that will be a sign that the bullish momentum is gradually building. But remember one thing here, that once the breakout happens, you want to scale down to your lower time frame to look out for reversal patterns, for retest of structures to confirm that this momentum is gradually building. So we want to see something like a retest of the trend line or the 1.28020 area, where we look out for buying pressure before we join any bullish move to the upside. So you can see how important this trend line is for us today. So you want to mark this trend line out on your chart, as we are going to be using this to guide our trading activity for today. So price remaining below the trend line makes us feel comfortable in a sell position, while the breakout of the trend line will welcome buying opportunities. So that is our view here on the GBPUSD for today. If you have any questions, feel free to let me know in the comment section. So I will be moving on to the next instrument because of time. I have less than 20 minutes and I need to run up on 2 more pairs. Okay, so if you have questions, just let me know in the comment section. Moving on right now, I'm going to go into is it the USDJPY? We've already treated, okay, the USDJPY will be the next one we are going to be treating. So, should I trade let's go into the XAUUSD first of all, and then we can now go into the USDJPY afterwards. So on the XAUUSD, this week so far has been of a bearish momentum. We've been selling. And one thing I've got to understand here is that price action has been a little bit choppy, caught within a range bound since yesterday, giving us a clue into the level of indecision in this market. And we all know that the market is looking forward to the first chairman certification before the House of Congress, which will give us an insight into the monetary policy of the U.S. economy as regards the previous economic data we've witnessed, and if there is likely going to be a further interest rate hike, or there's still going to be a hold on the interest rates. So these are things that we are going to be looking forward to tomorrow. And I'm of the opinion that participants are still not sure where price action is likely going to go. Hence, we've been witnessing this range between the 1,953 and the 1,946. Now, what did we see here yesterday that made us to sell? Actually, let's look at that start with that one, and then we will be looking out for our next line of action. So at the beginning of the week, we saw our price was ranging between the 1,958. Hold on a second. Let's I think I have network issues. Okay, I think I'm back live. Let me know in the comment section if you can hear me and can see my screen. Okay. So at the beginning of the week, we were able to spot a range here between the 1,958 and the 1,953. And remember, I told us all yesterday that as long as price action remains below the 1,955, we are going to be looking out for selling opportunities. And that area also is close to the support line of this range. And one of the key things we saw yesterday as regards to the structure was the potential of a reversal pattern after identifying what we will call a head and shoulder pattern around this area, which from a technical standpoint is a very, very strong reversal pattern. And with that structure identified there, we had a neckline situated at the 1,955 level, where we set a breakdown. Retest of this level will be welcoming an opportunity to sell. So we had the sell position yesterday, and we saw, in fact, we had a couple of sell positions actually. We saw the first one here, breaking down the key level, about 60 pips. Then we saw a couple of retest of structure to join this one, giving us another 60 pips before we were taken out of that position. And I do hope that you moved your stop losses accordingly to secure your position, like we always do in this community when price action moves significantly well in our favor. However, the appearance of buy pressure around that 1,948 and 1,946 was more of a concern to me this morning while I was monitoring price action in order to identify a potential trading opportunity for today. And with the continued buy pressure around that area, I was of the opinion that we could likely see a reversal pattern gradually unfold. And if that is going to be the case, then we want to be having the neckline of that reversal pattern at the $1,953.50 level, where it will also be sharing a confluence with that bearish trend line we identified at the beginning of the week. Now, what we are going to be looking out for today, if this is going to turn out to be a valid reversal pattern, is for price action to break out of the resistant trend line here and retest it to give us an opportunity to buy. And in fact, we already saw the breakout of the structure, breakout of the trend line, which for me is a sign that the trend line may no longer have the capacity to negate the bullish attempt. Remember, we had this trend line figured out at the beginning of the week after connecting the series of lower highs, but the appeared buying pressure around this area might might likely incite a bullish move where the breakout of that trend line will welcome an opportunity to buy the XAUUSD. So at this point in time, it's reasonable to have a buy stop order above the 1,953 to be able to join this bullish move to the upside. So since we already had the breakout of the trend line, we already had the breakout of the 1,953, then we already have price going through something like a retest or retracement into the structure that was broken. So let's have a buy stop order above the $1,953.50 level to capture a potential move to the upside. So that is how I'm going to be looking out for buying opportunities in this market for today, and I will be looking out for more opportunities to maximize this move if price action goes on to break out of that 1,960 level, which happens to be our key level for this week. So a breakout of that area too will welcome more opportunities to maximize this bullish move. Now, in as much as we're looking out for bullish momentum at this particular point in the market, we cannot ignore the potentials of the sellers too as well. And if we consider what has been happening in this market since the beginning, since last week Friday, you will see that price action has been on a bearish tone. And if we consider this, it's quite reasonable that looking out for selling opportunity cannot be far-fetched. Now, what we want to see on this chart that will make us to sell the XAUUSD or join this trend continuation to the downside. So we already have a level here at the 1,948 where I will be looking forward to price action breaking down and retesting the structure on my lower time frame to confirm the momentum of sellers in this market before I want to be joining a bearish move. So that is how we are going to be selling here. So our center of focus of today is not too far away from us. It's just between the $1,953.50 and the 1,948. So let's see how price action plays out within this range. And the next couple of hours, you want to be marking these levels out on your chart right now so that you can use it as a reference point when you're about to make your independent decision on this commodity. So let's see how price action plays out. Mark these levels out, and I wish you best of luck on this one. If you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to give you time to mark these levels out on your chart or probably screenshot my screen. And while I'll also look at the comment section for any inquiries for me. All right. So in the absence of no questions, I want to assume that we're on the same page here and you've already marked out your levels. So let's move into the last instrument for today. Good morning, Valeric. How are you doing today? Glad to have you around. All right. So the last instrument we are going to be taking for today is going to be the USDJPY. So on the USDJPY, what is the update we have on this chart? Now, looking at this current structure here, remember since the beginning of the week, we acknowledged the fact that price action has been ranging and we have price trapped within the 142.00 level and the 141.500 area to emphasize the level of indecision in this market. And one thing that we can say, this is the reason why this is simply because of the economic factors that we are looking forward to this week. And remember that the Bank of Japan is going to be releasing the meeting, the what's it called again, the monetary policy minutes later on today, which majority in the market will be looking forward to, as this will also give us an insight into the monetary policy of the Japanese government, sorry. And as a result of this, we have seen how price action has been going through a range, waiting for a catalyst that will help drive price movement for the week. Remember yesterday I told us all that we are going to be having a buy stop order above the 142.00 level, which actually was triggered, and price moved about how many pips in our favor? The initial one moved about 30 pips. Hope you moved your stop losses. And the second one moved about 20 pips. And I think this one took us out at a stop loss at this point. As you can see here, we were taking out at this point right here. And well, it's okay that the week is still very early. This is the second day of the week. I still think we can still recoup whatever loss we have made on this trade. So how do we intend to position ourselves ahead of the New York session today? Now, the first thing I would like to do here before I go into the details on this chart is that let's scale up into the higher time frame. Let's look at things from an holistic perspective, and let's use whatever structures we have there, lining up with what we have for the 1 hour time frame to make an informed decision for today. Now, scaling up into the 4 hours time frame, this is what we saw at the beginning of the week. Now, looking at the structure here on the 4 hours time frame and taking into consideration the activity of price action since the beginning of the month of May, it is quite clear here that price action has been very, very bullish. And when we connected the series of higher lows at the beginning of the week, we had this couple of trend lines here, which we said we were going to be using to guide our trading activity. And as long as price action remains above a trend line, you know we want to be looking out for more opportunities to buy. But in this case scenario, there is something different about the structure. So if we zoom into the current structure here, you will see what happened last week. We saw our price action got into the 142.00 level. I think this is the highest point price action has ever been this year. And one thing interesting we saw here was the rejection of that area a couple of times. And the same thing also happened in the last 24 hours, as we can see how buyers found it difficult to break through that level. And what this simply tells us is that sellers are strong around that area, and the bullish momentum we are seeing so far might likely be going into a retracement, which is a reflection of profit-taking activities. And if this is going to be the case, how far will this retracement phase go? Will it get to the trend line here, the first trend line here, or is it going to go into the major trend line before another wave of bullish momentum will happen? Or will it go to as far as breaking down the trend line to send a signal for another sell-off? So this is what we are going to be looking at today. So in order to do this, we want to scale down into the lower time frame to see how participants in this market has been reacting to the zone since the beginning of the week. Of course, it has been very choppy. It has been a range, so we want to see price action either break out or break down of that range to give us an opportunity to buy or sell the USDJPY for this week. Now, scaling down into the 1 hour time frame, this is what we were able to identify at the beginning of the week, and I think this is what we are going to be using to guide our trading activity for today. Personally, I had a level identified here during the New York session yesterday. I don't know, I can't remember if I identified this during our live session, but I'm very sure this was identified during the New York session yesterday. I think prior to the New York session, I think. And one thing about this level is that it shares a confluence with our trend line. And I was using this trend line, this key level here, the 141.750, to guide any potential bearish move if price action drops below that level. And in the last couple of hours, we saw the breakdown retest of that structure to trigger my first sell position for the week after being taken out in a loss from my buy position. And this sell position is already running at this point. I have about how many pips in profit right now? About 35 pips in profit, which is not bad at all. Having my stop loss move to break even at that position. And let's see if we could still have more opportunities to maximize this bearish move to the downside. Now, with our support line here, which happens to be what we identified at the beginning of the week, a breakdown retest of this level will definitely welcome more opportunities to sell. Well, for me, who is already in profit on the USDJPY, I could afford to have a sell stop order below the structure so that I can capture that move all the way to the downside. But if you are a conscious trader, you might want to wait for a breakdown to happen, then scale down to your lower time frame where you want to be looking out for a retest of structure where you see signs that buyers are losing momentum and finding it difficult to climb back and retain the momentum above the 141.500 to give us a signal to join a bearish move to the downside. So this is how we are going to be trading the USDJPY for today. So let's be on standby to catch any of these opportunities as the market unfolds. Then we also have a level at the 140.750 where a breakdown retest of this level will also be giving us more opportunities to maximize the potential of this move. So that is that on the USDJPY for today. So it has been quite a wonderful moment today as we have simple setups that we can use to guide our trading activities for today. If you have any questions, I will wait for the next 10 to 15 seconds to see if there are any questions before I draw the curtain on the Extra and Speed live session. So let's see what we have. Any questions, please? All right, so in the absence of no questions, I want to assume we're on the same page and we are well equipped and ready to be part of the New York session, which is starting in about an hour from now. So I wish you best of luck during the New York session today. And for those who are joining us for the first time, I hope you are able to gain one or two things that you can use to maximize your trading potential during the New York session. And one thing I will advise you is that the more time you spend with us, the more quickly you'll be able to adapt with our style and independently eventually be able to use the information you have gathered here to make independent decisions on your account. So on this note, I wish you all the best of luck today, and I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well the instrument on our watch list has been doing, and at the same time get ready for the New York session tomorrow. And don't forget that tomorrow lights a very high impact event. The Fed chairman is going to be having a speech tomorrow, and we're also going to be having the CPI data coming from the UK economic docket. So we want to get ourselves prepared for this event. So let's see it this time tomorrow, and do have a wonderful evening, everyone. Bye bye.